For some reason, people think I don't take losses. So today I'm going to be running you guys through a few losses that I took, what was going through my head at the time, and then how things transpired. See, my executions are on here from the get-go. I'm going to put on some annotations. This is the new week here. New week, and then this is Monday, Tuesday, and Wednesday. When the week opens up on the Monday, we open up with a gap. This gap is going to be a drawn price, especially if it has not been filled yet. So when price rallied up higher here on the Monday, we left open this top area here. So automatically, this is going to be where I'm expecting price to get to. When price rallied up higher on Monday and did not go towards the gap, that still means that this gap is open. And so when we rally lower on the Tuesday, this is where I catch my very first entry. I'm going to go down to the 5-minute time frame for this. So this is what we're looking at on a 5-minute time frame. You can see the gap is nice and clear. No trading within this range here. So this is automatically going to be my very first trade. So you guys know on Tuesday, what am I looking at? I'm looking for accumulation, which is sideways, which is what we got on the Tuesday. Then I want to see price drop down into a POI before going higher. And then what I did was I utilized this down close candle in here. Seeing it now, I don't know what I was thinking, because there's relative equal lows there, you know, relative equal lows here. But there was a down close candle in here that I was utilizing for my very first attempt at the trade. And so you can see I blatantly got stopped out. So when price traded down into this down close candle, let's just go ahead and mark it up like this and extend it out to the right. You can see here, this one I jumped in. When price dropped down into the down close candle, it didn't last long. We were looking good at one point and then crashed straight down to hit my stop loss. And the thing is as well, when I zoom in, my stop loss wasn't beneath this low here, and it wasn't at 50%. It was beneath this kind of 6 wick. This one right here. You guys can't see it, but there was a wick in here. A short-term low wick. This is where I put my stop loss underneath. So it was a very tight stop loss. It is what it is. At least I know I'm not going to be suffering drawdown for ages. I'm not looking to be having a stop loss of about, let's just go ahead and look at it from here. I'm not having a stop loss of 12 pips. I entered in roughly about 9:55. I got stopped out at 10:25. So basically 30 minutes, guys. So this was the very first trade. Obviously, looking on hindsight, this technically is relative equal lows. I should have been able to see that, but this one caught me out. It is what it is. And by the way, Monday, there's no trading because I like to leave Monday to play out sometimes. I do trade and get active on Monday sometimes, but sometimes I let Monday play out because normally that Monday is used for liquidity anyway. So now let's zoom in. So this was my very first attempt. This was a fail. This was negative 1% and it did not go to my target. On Tuesday, we ran out these relative equal lows. I was very busy at this time, so I wasn't as active. But on Tuesday, we ran out these lows and then we didn't go nowhere. So far, what do we have for the week? My weekly profile is if I'm bullish on a pair, I want to see it go sideways, drop, and then expand. Let's move on to Wednesday. So this is Wednesday now. So on Wednesday, what did we get? On Wednesday, we go sideways. We drop in London, but we don't take out the lows. So normally you guys know I like to get in from a drop when price is dropping if I'm bullish. But we never did that. The only other way, if I'm believing that price is going to run up to the upside now, is I'm going to look to jump in where price creates an inefficiency. So you can see here, if I zoom in, there's a blatant fair value gap in here. So I'm going to go ahead and expand this out to the right. So my next attempt at this trade, don't forget, it's moving in London. This is my entry time. It's not always going to come back to you, but I prefer those ones. I don't always jump in on these ones where we don't run out the low completely. I need to run out the low completely. It did run out some liquidity, but it didn't run out the whole thing. I really wanted this one to get taken out. A late entry is still a valid entry. This is where I jumped in. I jumped in when price traded down and closed in the majority of this fair value gap in here. And then my aim was to target the gap above. And I got stopped out right here. So I put my stop loss beneath this kind of 6 wick. I was being a little bit zealous. So I jumped in at 46. And my stop loss was at 44. So we had like a 2-pip stop loss. I like to have a small stop loss. You guys can have a 5-10 pip stop loss. If that's what suits you, that's what suits you. I like to have a smaller stop loss for a much higher return. And sometimes this is what's going to happen. You might get stopped out once and then price will go. We jumped in here. We got stopped out here. But then we get taken out. We get taken out for the second time. And that could have been me. I could have been like, do you know what? I done lost for 2 days in a row. One trade in the London session the day before and then another trade now. And that's me done. But I said, you know what? Price is still trading according to what I want to see. It's in my fair value gap. And someone said the other day, MHUFX is using the word fair value gap. Look, it's the same thing. Fair value gap, imbalance, inefficiencies, all of that means that it's the same thing, guys. It's the same thing. So regardless of the terminology I use, the only reason I changed it is because on YouTube, FVG or fair value gap is used more than imbalances. This is clear, get out of the way. I jump in again roughly here at 46, but this time I learned my lesson. I'm like, do you know what? I'm not going to put my stop loss within these wicks here. I'm going to put it beneath the short-term low wick. Price should not trade through the short-term low wick if we're going to be pushing up higher. And so this when I jump in on the trade, don't forget, you know my target. My target is right here. The target is the gap. We then expand to the upside. So let's zoom in now. So first, what happens now? I know it looks all weird on the screen. Let's see if I can just expand it out a little bit. So first we start running higher. And then eventually, look at this, guys. Then we get that expansion. Then we get that massive expansion. Let's just zoom in. Obviously, this is 1:30 p.m. This is when the New York embargo is going on. News release is normally released at this time. And then we explode to the upside. When you see price move with this much speed in your direction, make sure you either take something off the table or you close out your whole position. I can't stress it enough. Don't let something like this come back on you. Just from here, let's look at this from here, and the price rallied up a good 62 pips. Be taking something off the table. I believe on my channel I have a lot of intraday traders. If this was you, you take it off. If you're swing trading and you're swing trading from here, obviously you want to swing from the swing points, but take something off the table, take partials, and then let the rest ride, because you never know what could happen. From my entry roughly down these lows, I took TP roughly about here. That's 75 pips in my favor. So you guys can work out the risk to reward on this. Beautiful trade. I believe I had an alarm here as well to know when price was going to hit this. It hit it, but it just exploded way past it. This is taking losses, guys. Yes, I do take losses, but I don't give up because I've taken a loss. If my POI, my drawn price, has still not been targeted yet, it would always be an option. And so when price is doing this, when price is dropping, I'm not going to give in and start trying to sell now. When price was dropping here and then it came back, some people would have said that this is an institutional candle, it's an up close candle, and you should be selling. No, guys, the drawn price is right here. This is the drawn price. And so this is why I'm going to be targeting this area. Gaps need to be filled. Price is heavily drawn to these areas here. So don't give up just because you've taken a loss. My POI was the gap above. I'd taken a loss, but look, we're still trading within that fair value gap. Did we start pushing to the downside? No. Did we violate any short-term lows? No. Short-term low held there and it held here. So why should I believe that this one's going to fail? This move would have been less likely if it had traded through this short-term low. But I'm not going to give up on this trade when it's trading within my fair value gap. I'm going to give it another opportunity. So instead of going the opposite way, which is what I would have done back in the day, or giving up on a trade, I'm going to give it another go. If it's trading within my entry area and I still have an active POI that's not been traded to yet. So don't be that person who tries to go the opposite way whenever you lose a trade. If I had given up and then I came back maybe 2 hours later or however long it was, and then I had seen this, guys, I would have been just all up in my feelings. I would have been vexed, I'm not gonna lie, because I've been stopped out on Tuesday, been stopped out on Wednesday, and then price goes in my favor. Oh, guys, come on now. Even though I know things can turn around, it would have been very annoying to see this. This might have affected my trading for the rest of the week. But look, don't give up on your trade, you know? And I saw somebody on Instagram the other day, and we all take losses, guys. We all take losses. But I saw someone on Instagram the other day. They jumped into a trade, I think for a buy. Then they hit their stop loss. Then they revenge trade, so jumping for a sell. Then they hit their stop loss. And then afterwards, man just looked in pieces. He was so upset. That's the feeling you don't want to have. You want to avoid that feeling. When I get stopped out the first time, I'm not all up in my feelings. Okay, is what it is. But if I revenge trade and then I get stopped out, oh, I'm gone. I'm all up in my feelings. Yeah, guys, don't be that person. When you take losses, just know that we all take losses. We all take losses. Sometimes you're in too early. Sometimes your stop loss is too small. But then once you correct those things, I'm not saying you're going to get a massive move like this, but correct those things, learn from your mistake, and then go again.